This house wasn't just wood and nails. It was a living archive of the Miller family. For over 70 years, it held their laughter, their tears, their history. Sarah Miller's grandparents built it with their own hands, a symbol of post-war hope. Every corner told a story, the pencil marks on the doorframe tracking her father's height, the faded patch on the living room wall where her grandmother's favorite armchair once stood. This home was the heart of their family, the constant backdrop to every memory. But a few years ago, Sarah's recently widowed grandmother, facing rising costs and a fixed income, saw an ad that promised financial freedom, a way to stay in her home without the burden of monthly payments. It was a reverse mortgage. The offer seemed like a perfect solution, a lifeline that would allow her to live out her years in the home she loved, surrounded by a lifetime of memories. Little did they know, this lifeline would soon become the very thing that would tear their family history apart. The promise was simple: tap into the home's equity, receive payments, and never be forced to sell. For Sarah's grandmother, it meant peace of mind. The commercial showed smiling seniors enjoying their retirement, worry-free. The loan officer was friendly, reassuring. He explained that the loan would only become due when she permanently left the home. It sounded straightforward, a secure way to access the value she had built over decades. But hidden within the pages of complex legal documents were clauses and conditions they didn't fully grasp. Terms like non-recourse, servicing fees, and occupancy requirements were brushed over. The family trusted the professionals, believing they were securing the grandmother's future. They didn't realize they were signing away not just equity, but control. The fine print, dense and confusing, held the keys to a future they never imagined, one where the house was no longer truly theirs. The trouble began subtly. After her grandmother passed away, the letters started arriving. They were from a servicing company Sarah had never heard of. The tone was no longer friendly and reassuring. It was formal, demanding. The letter stated the loan was now due and payable in full. The family was shocked. They believed they would have the option to repay the loan over time or sell the house on their own terms. Instead, they were given a stark, non-negotiable deadline. Suddenly, the balance owed was far greater than they anticipated. Interest had accrued daily, and a mountain of servicing fees, insurance premiums, and property preservation charges had been added to the principal. The dream of financial freedom had morphed into a nightmare of debt. The company was impersonal, a faceless entity communicating only through legal notices. The family felt trapped, fighting a system designed to be confusing and overwhelming. Their attempts to communicate were met with a bureaucratic wall. Phone calls led to endless hold times and transfers between departments. Emails went unanswered for weeks. Sarah and her family tried to get a clear statement of the total amount owed, but the figures kept changing. They wanted to understand their options. Could they refinance? Could they buy the house back for its market value? Every question was met with vague answers or a referral back to the dense loan documents. They discovered the non-recourse clause meant the lender couldn't come after other assets, but it also gave them the power to foreclose and take the house if the loan was unpaid immediately. The family felt powerless, as if the home had already been taken from them. They were grieving their matriarch while simultaneously fighting a silent, relentless battle to save her legacy from being erased by a contract they never fully understood. The home was no longer a sanctuary, it was a battleground. In the end, the family couldn't raise the funds in the short time allotted. The house, filled with 7 decades of memories, was sold at a foreclosure auction for far less than its market value. The proceeds went to the lender, satisfying the inflated loan balance. For the Miller family, the loss was immeasurable. It wasn't just a financial transaction, it was the erasure of their history. The pencil marks on the doorframe, the stories held within the walls, all gone. Their story is a harsh warning. A reverse mortgage can seem like a lifeline, but it can also be a trap. It's crucial to understand every single word of the contract, to seek independent financial and legal advice, and to have a clear plan for the future. Don't let a promise of peace of mind silently steal your family's history. Ask the hard questions, read the fine print, and protect your legacy. Thank you for watching.